Paul, central banking is supposed to be a little bit dry, certainly free of drama. Economists talking macroeconomics doesn't really scream theatrics. But of course, where Donald Trump's involved, well, there's usually some drama, and it's no exception with the Fed. There are concerns now that he's interfering with an institution that's supposed to serve the people, not one single leader.
$3,500,000 home of the Federal Reserve, founded in the Wilson administration, is opened in Washington.
It was built during the Great Depression and was the backstop for the global economy during the last great financial crisis. The US Federal Reserve guarantees every dollar that changes hands around the world. In theory, it should be free to work without any outside political influence. But the arrival of Donald Trump as US president is challenging that idea. As a Republican candidate, Trump accused the Fed of helping Democrats by keeping US interest rates near zero to cut unemployment and prop up a fragile recovery.
We have a Fed that's doing political things. This Janet Yellen of the Fed is doing political by keeping the interest rates at this level.
The Fed chair didn't take that lying down.
The Federal Reserve is not politically compromised. We do not discuss politics in our meetings.
The exchange led to fears Trump would, in turn, try to pressure the Fed to do his bidding. So why does it matter?
The choices made by central banks affect the price of goods, how much you pay in the supermarket. It affects how much you pay for gas. It affects how much your loan is to pay a mortgage on your house.
Often, politicians will want central banks to do things that are short-term expedient, but long-term dangerous for the economy. So, for example, politicians often want central banks to print lots of money because in the short run, printing money is like taking a drink. It feels really good. But if you print too much, you have an awful hangover later.
And potentially runaway inflation. This ruined Germany's economy in the 1930s. Money was so worthless, it was burned because it was cheaper than conventional fuel. And more recently, people in Zimbabwe and Venezuela blamed their bouts with hyperinflation on leaders meddling with central banks. But the latter two weren't independent. The reality is that even independent central banks are constantly fending off attempts by politicians to influence what they do for the economy. The European Central Bank and the Bank of England both face similar pressures to the Fed. There are checks and balances in place to stop presidential overreach. The Fed reports to Congress rather than the president. But some experts see a wider trend.
In the wake of the financial crisis here in the U.S., Congress curtailed the emergency lending powers of the Fed. So that process of reining in independence, that's been underway for some time in the wake of the crisis, and there's no reason to think, given these global, broader populist movements, there's no reason to think it's going to end anytime soon either.
The ultimate test of President Trump's attitude towards the Fed may be in 2018, when he'll either reappoint Janet Yellen, former President Obama's choice, or replace her.
And until that time, Donald Trump has to forge a working relationship with Janet Yellen, but he can influence the Fed. He nominates governors, and there are two positions to fill. Bear in mind, all presidents do this. So politics is part and parcel of a central bank's economic cycle. The concern remains, though, about growth targets. President Trump wants 4% growth annually, but most current estimates suggest it'll only be around half that this year. Might ramping up growth increase inflation? This would make the Fed's job of keeping it at sustainable levels rather difficult.